Wall Street Unplugged looks beyond the regular headlines heard on mainstream financial media to bring you unscripted interviews and breaking commentary direct from Wall Street right to you on Main Street.
What's going on out there? It's January 10th. And I'm Frank Curzio, the Wall Street Unplugged podcast, where I break the headlines and tell you what's really moving these markets. So if you see me right now, I'm actually not here because this isn't live. I'm in Las Vegas, Consumer Electronics Show, but right now, as you're watching this, I am doing an AI tour, an exclusive AI tour, right? It's an executive tour I pay a lot of money for, and they're going to take me around introducing to the newest AI technologies at Consumer Electronics Show and all the companies and how they are using this technology and incorporating in what they do pretty much every day. So 6 to 8 hours, I think this tour is. It's at both major venues, which is the Venetian. That's the hotel I'm actually staying at. Also, it's going to be at the convention center. Again, 2 million square feet. It's going to be a lot of fun. It's going to be really cool. I think 120,000 people expect to show up. This is where all large technology companies, all technology companies in the world come to this event to announce the products they're going to launch over the next 3 to 6 months. So I'm going to give you the exclusive, a lot what's going on in this field, which I know a lot of you are interested in. So really, really cool stuff. I'm going to be there the whole week. Follow me, Twitter, at Frank Curzio. I'm going to be having lots of videos, updates, and tomorrow I'm going to try to join Daniel live from the floor of the Consumer Electronics Show if I can. This way I can give you an update, real-time update on everything that's going on. So be sure to watch Thursday's podcast. If not, I'm going to be able to give him a lot of data, a lot of stuff. Again, I'm going to be doing this with my team like I always do every single year. I've been attending this conference for 12 years. I find the best ideas. A lot of fun. In the meantime, for now, I'm going to leave you with an interview that I did a couple days ago with Frank Holmes, HIVE Technologies, mining company, executive chairman, and also in the gold industry, U.S. global investors. Great guy, good friend. Listen to this interview. Right? We talk a lot about crypto. We're going to talk about the gold industry. How come gold didn't go up? He's going to talk about his Bitcoin forecast, which is pretty high, really, really high. And he's looking at just a couple of years out. So fantastic interview. Let me know what you thought of the interview. Of course, frankcurzioresearch.com. And here is Frank Holmes' interview right now. I want to welcome Frank Holmes to the Wall Street Unplugged podcast. Frank is the CEO and Chief Investment Officer at U.S. Global Investors. He's also the Executive Chairman of HIVE Blockchain Technologies. Also, very good friend. Happy New Year, Frank. How things going, buddy?
Fantastic, and Happy New Year to you and all your subscribers.
So we have seen a lot. There's so much to talk about first. We can go to crypto. We can go to markets. I guess we'll start with the markets because I know with HIVE Technologies, that's going to be a big conversation with how much crypto's moved and where it's going. You have forecasts on your site. But I want to start with the markets because we're used to a Santa Claus rally. We've seen the markets absolutely surge, though. 9% in November, the second highest. Second best November in 40 years, I believe. But then in December, it was interesting. 2% rally into the Fed meeting. No one really expecting anything. Then all of a sudden, a Fed pivot out of nowhere. When 10 days earlier, Powell was like, rate cuts aren't even on the table. And then you saw another 3% move. Well, looking at the market being up, a ton from November on. Is that going to be a reflection into next year? Because it is an election year, and we know the market goes up in election years. But what are your thoughts heading in, given that huge rally that we had towards the end of 2023?
Well, I earlier last year in 23, I commented that when you go back over 60 years of data points, the presidential election cycle, which is a 4-year cycle, is really significant when you're in the third year and the president is a Democrat and Congress is Republican. And when that happens, the market's up double digit at year end. And you saw it go up, you saw it fall, you saw a bifurcation that took place with the Magnificent Seven leading the charge. But nevertheless, the S&P 500 was up double digits. And there was so much negative news everywhere around the world. It's really interesting how powerful that data point is. So now we're going into the 4th year of a presidential term. And what is the math of a 4-year president's term? Historically, it's not as good as a 3rd year, unless interest rates are falling going into the 4th year. And that's what we have. So it could be up 9%. Doesn't mean it's not going to have lots of volatility between now and this time next year. But with falling interest rates, I think the market can trade higher.
So it's interesting because right now the market is pricing in, I think Powell suggested maybe 3, and the market's pricing in 6 now for next year. So a lot of that is, it seems everybody's really expecting it, and it should be, right? We've seen inflation come down. So what are your thoughts when we head into election year? Because everyone says, and they're right? The election year, the market always goes up. They say it goes up, I think, 74% of the time in an election year. But when you look and you take a step back, as you know how you can interpret data any way you want, on a regular year, the market goes up 65% of the time. Also, the average gain is, believe it or not, just 6%, where on election years, where the average gain is more like 9%, depending how far you go back. I mean, 56, 57 was when the S&P became 500 companies, 1920 when the index was established. Still around 9% returns. So you're predicting like higher returns for the election year, and mostly just because we are going to see the interest rates? Because some might say, okay, maybe that's factored in because we've seen the market rise pretty much 5% since the Fed made that decision and that pivot since December 13th.
Yes, and well, I think it could be more, because what really shocked me this week, when you look at data points, was the PMI. And I write about it every month. And for your listeners, that's the Purchasing Manufacturers Index. Why do I follow that? It's because it's a very strong leading indicator. And it's simple, because if you get a big order to manufacture some motors, then you're going to order a lot of copper, you're going to use a lot of electricity, you're going to hire workers to make those motors. So it is very forward looking, and it's highly correlated to commodity demand. It had bottomed in the fourth quarter, and it looked like it was turning up. And then I mean by that is the last month is above the 3-month average. When it's below this magic number called 50, it means the economy is contracting, and it fell below 50 as rates were rising. And what shocked me, I thought it was going to turn up for last December, but actually it's negative. And what does that mean? Well, bad news is good news. That means they're going to drop rates more. It's an election year. That means they're going to have to fuel the pump. They're going to do everything they can to ignite this economy, because the Purchasing Manufacturers Index is weak. Europe has bottomed. It really surprised me. Germany almost fell back to during COVID numbers. If you look at those data points. So I think the world is going to go through a big reflation. I think that you're going to see gold have a great run later this year. It had a big lift at the beginning, and now rates are sort of bottomed up, but rates aren't going to rise much with that negative news.
Let's talk about gold for a minute. So you're a person that believes in gold and Bitcoin, right? I think we're, at least a few of the people, not many out there. It's either one or the other, and people hate each other back and forth. But when I look at gold and I look what happened in 2022, 2023, where I felt like gold for 10 years prepared for the ultimate event, right? This massive spending globally, central banks craziness, massive inflation. It seemed like the perfect environment for gold to go to 3,000, 4,000. Now you're seeing inflation come down. Even real interest rates are positive, right? You're seeing if you're looking at risk-free rates 4%, inflation 3%, meaning you could earn interest instead of just holding it in gold. If gold didn't go up then under those conditions, what's the argument that it's going to go higher? Because that's the question I'm being asked. And I'm curious, with someone who has an ETF, you're wearing your Go AU ETF. I went there to the New York Stock Exchange where you rung the bell. You invited me, which was one of the great things that I've done in my life. Thank you so much for that. But for someone who's been in this industry for so long, why should they be in gold?
Well, gold is a rudder, and you've got to think of it or a ballast in a sailboat. So when the wind hits the sail, it doesn't tip over. And I think it's really important that smart quant people like Ray Dalio, the largest hedge fund in the world, he has a 10 to up to 25% on his parity trading gold as an asset class. And I think that it's proven exceptionally well this century. In the past 24 years, gold has outperformed the S&P 500 2-to-1. That's pretty compelling as having as 10% of your portfolio and rebalancing each year. I think that what we have to realize is that the strongest currency last year was the U.S. dollar. And if you looked at previous times, how high rates went last year, the 10-year, the 5-year, and the 2-year, it it suggested, based on previous cycles, gold should be like 1,300. It didn't collapse. It actually was pretty stealth. It was very resilient on just that currency play. And I think that was a reflection of so many other central banks coming in to buy gold was another important factor to that. So I think on that, to protect you against the dollar, gold has done exceptionally well. Now going forward, going into an election cycle, fourth year, how much money printing, how much they're going to panic over the economy, it suggests that gold can be $4,000 on my models for simplicity. And I think right now we're starting to touch negative interest rates. It's better to buy dividend-paying stocks than a 5-year government bond now, and those rates are going negative. So anytime that happens, buying quality gold stocks. And by the way, I'm really happy and thrilled with GoAU. I don't know if you've looked at its performance relative to the GDX and GDXJ since we launched it with the New York Stock Exchange, but that quant approach to portfolio construction and the stock picking factors, it's outperformed a market cap weighted index. It really is they call high grading, looking for those factors. So it's as a gold holding, you've got to put it up against the GDX and GDXJ, which have the most money in gold equity ETFs. And it's done what it said it would do. And hopefully, touch wood, I'll touch wood up here, that it will continue to do it, outperform a basic market cap index.
Well, I mean, it's outperforming because, Frank, and I'm going to give you a little credit because you're great at what you do, right? I mean, there's a lot of methodology. We've covered this, and I love this part. I don't know if I want to bore everybody else out there, because unless you're an analyst, but I really appreciate what goes into the work behind this. And you can see that you loaded up 30% here, mostly on royalty companies. What's it going to take for, say, the next three, right? Say Sandstorm or even Ocean Gold or Harmony, to those to become the 10% weighted? Because it seems like when I look even at the big guys, right, you think, all right, prices are going to go higher. These are producers. These aren't the smaller minded that aren't producing anything, junior miners, even the mid tiers. But the inflation costs have gone up tremendously, and I know that's probably starting to top out, maybe go a little bit lower, but that's really hurt their margins even as prices have gone up, but not really that much. You can look at 3 years and we were at 1850, 1900. What's it going to take for some of the producers to actually get into the top of your portfolio? Because that's what people want to know, where well, if not gold prices are going much higher, it should be really great for the largest producers, right?
The model's constructed with three pillars. One is, what is the best business model in that industry? And the best business model that's much more like a technology company is the royalty model. The royalty model is very much like a SaaS model of recurring revenue, and they have much higher margins. The revenue per employee of Franco-Nevada is $34 million. They have royalty on Barrick and Newmont's assets in Nevada, where the average revenue is $600,000 of revenue per employee. So they have a much more agile business model, and so that has been a great performer. Then we looked at, when we created this beast here, we spent 10,000 hours of looking at a factor. And there was at the time about 100 gold producers around the world, down to about a $50 million market cap. And we said, there's 100 different factors, what works, what doesn't. So debt to equity is a good stock screen. It's not a good stock picker. All right, well, what is a good stock picker? A good stock factor for picking stocks is something that can capture momentum, or something that is at a deep value, Warren Buffett style discount. All right, so what are those factors? And I've mentioned this many times. Gold analysts never call us up and say, I love this story because it has the highest free cash flow yield. They never do that. And guess what? If I just pick out of the 100 gold producers, and now there's like 85 of them because of mergers, etc., if just the top 10 who have the highest free cash flow yield, I outperform everyone. But you can't run a mutual fund or an ETF portfolio with only 10 names. You have to have at least 21 names. So it's interesting that factor is very compelling for stock picking. Now, momentum, and I've said this several times speaking at institutional gold conferences, revenue last quarter over the average over the past 4 quarters is more predictive of outperformance. So that's momentum. So when the last quarter is above the 4-quarter average, it means either the price of gold is rising and their production is rising. And what all it shows you is that the quant world is much bigger than the gold industry. And the quant world is agnostic towards any industry as long as revenue is torquing it up, is growing. And you can think of Apple. When Apple's iPhone was taken off, it took off. It had this incredible run in a short percentage time because it was growing with the momentum of the iPhone. You get hot products. Well, in the gold mining business, you know when a project's going to come on stream, the simplest way is to look last quarter over 4 quarters is momentum that usually far outperforms other factors.
So I'm going to get a little deep here in the woods, because what you said,
is that too complicated?
No. That I'm going to get complicated because I want to run this by you because this is a question I have, and hopefully my listeners could understand where I'm going with this. Because I agree with you when it comes to momentum. When you're looking at the quant funds, you have momentum, or you're going to have a Warren Buffett style with the deep value, and I get that, right? That's what we've all, a lot of us been taught that as well, right? Like earnings drive stock prices. You brought up Apple though. Apple year over year barely grew their earnings, 6.11 to like 6.13. Sales are down 3% year over year. Yet this is a company that added $1 trillion to its market cap this year. Do things like this that you didn't really account for something other than the 2 things that you mentioned, 2 variables, 2 factors that you mentioned that drive stock prices? Are there other things that make you update your model? Because for me, as someone who's been doing this for 30 years, I look at that and I scratch my head and like, why would you buy Apple? And it's not cheap. Right. It's at 30 times forward earnings. It's not growing earnings. It's not growing sales. Yet you saw a massive amount of money pour into that stock. And the Magnificent Seven, but a lot of the others compared to Apple are growing earnings pretty fast. Do you update your model when you see things like that, or is that something that is expected?
I think that liquidity begets liquidity, and because ETFs now dominating trading between stocks and ETFs and the quants of how they arbitrage every number. So you get this accelerated looking for liquidity, and a lot of these hedge funds that are in the quant world leverage their balance sheet and carve out basis points. So we have to recognize, so where are they going to go for liquidity? Someone like Apple has liquidity. And if you looked how strong the dollar was, it's why the earnings the revenue only grew by 3%. It fell 3%. In fact, if it was exactly the dollar rise, they would have fallen more. So interesting on a relative basis, I thought that Apple did well with this currency move, because when you're in the gold world, you really have to follow foreign currency moves. You have to follow 2-year government bond yields on a relative basis. And then when you look at the Magnificent Seven, you have to say, well, what would happen if the dollar had declined? What would the revenue have looked like converting back? Their exports would have been greater. So it hurts the exports. And remember, these other countries have weak currencies. They're selling strong into emerging markets and other places. But when you convert back to the dollar, it doesn't look so pretty. And it's trying to deal with that movement to understand it. But coming back to the gold stocks, is that the gold universe is tiny. Really, in respect, is tiny. So why do the companies which have revenue last quarter or 4 quarters outperform the GDX and GDXJ and even GoAU, that concentrated portfolio? Why would that happen? It's because of other buyers, where demand is greater than supply. And there is a whole universe of quant trading desks that look for that revenue momentum, and they're agnostic of the industry. And so I see that some of that money would come and flow into the gold space, and that's where we think those gold stocks, that's why they outperform. So it's one of the factors we use in GoAU. And it's for people to understand, I'm looking for high free cash flow means the stock's very, very cheap. So therefore it means it's probably taken over, because the yield, because it has a high free cash flow, or it can buy back stock or pay bigger dividends, or it can expand its operations. But quite often when that big free cash flow just remains cheap long, someone takes them over. And so then that's mean reversion, they call it in the world of physics. And the other one is inertia, Newton's law of momentum. And they're the two big factors going back and forth of physics that are applied to GoAU. And we try to balance that. But when we look at the tech sector, like you just mentioned, if you back out, like I said earlier, the dollar moves, you can see, I said to you earlier, gold did exceptionally well on a historical basis. And in fact, Apple did exceptionally well if you normalize the dollar.
So before I get to the next topic here, I want to ask you, you said 4,000 gold with your model. When is the time frame for 4,000 gold?
I think over the next couple of years, you're going to see that. These cycles last, these interest rate cycles for them to fall. It'll take, after that, it'll take another 6 to 9 months, like having a baby, before you start getting that inflation creeping back up. And then policymakers will slowly then move after that. So 9 months plus 9 months is 18 months. So you can see this sort of this baby cycle happening, and it doesn't happen quickly. And so one of the things we put in all our prospectus is that U.S. Global is that we believe that government policies are a precursor to change. So we monitor, particularly the G7 countries, and look at their monetary and fiscal policies. And it's really simple. It's all binary. So think of it. How do you look at government policies? Monetary, fiscal. There's a lag. There's always these lags between the implement. And there are bad policies and good policies, but even with a good policy, there's a lag before it gets traction. So it's to recognize that. And then when it comes to monetary policy, it's simple. Real interest rates and money supply. Well, money supply printing hasn't really started yet, but now we're going to negative interest rates, which is bullish for gold. Over in fiscal policy, we see that the taxes and regulations are actually the EPA and all those regulations, they've distorted the life cycle of a mine. What used to be, when I first got in the business in 1978, before you were born, Frank.
No, I'm older than that, believe it or not. Go ahead, though. I appreciate it.
Well, you look younger.
Thanks, buddy.
It's the life cycle of a mine, which has now become the Lassonde cycle, people of a mine. Was about 9 years. You had a discovery, the stock ran up, then the stock fell and corrected. You built the mine, you got the permitting, and it took about 9 years from date of discovery to you're getting this cash flow. It's now 30 years. So the supply is not coming. But you know what? There's 1 billion people having sex right now in this world, 12.5% of the world's population. And there's going to be a lot of more babies. So the world's going to continue to have babies. And that supply of gold from the gold mines is not going to, for all the mining actually, is not going to be there, because the restrictions and the difficulty is basically distorted that yield, that length of that. And so it makes it very different when you look at microcap gold stocks. That whole space is very different. But what we do know, and what triggers Bitcoin, is because Bitcoin's capped at 21 million coins. Over 19 million have been mined. There's only 2 million left. There's no more than 21. If you all of a sudden cap gold mining supply, no more supply, gold would be 10,000, 20,000. And it's recognizing what they call another rule, Metcalfe's law, that if you limit supply and people adopt and believe in that as an asset class, it grows exponentially in price. So we're seeing that right now. What's really growing is the recycling of gold is growing. That's where the supply is coming. It's not from the new mines of big new mines coming into production. And if you look around the world, it seems to be Africa, and where brilliant minds like Robert Friedland are. He's in Africa. Well, why do you think he's in Africa? Because the life cycle of a mine is not 30 years there. You have a discovery, and you can quickly see how fast they can get permits through, and they will do them with standards of North America. They're going to do with ISO 1401 environmental policies. That's what Freeland always uses that. So it's going to have the highest standards in North America, but you're not going to go through the bureaucracy. And that's where that growth is. Now you run into these geopolitical risks of Al-Qaeda's running around, et cetera. So that creates the uncertainty. But if you were looking for any new supply, it's going to come out of places like Africa. They're not going to come out of North America. And that's just so, but the people continue to have babies. And so I think that this sort of supply demand is very bullish. And the other big change is the demographics. So younger people, much younger than you, much younger. Now you told me that you're more than, over 50. Than 45. You're 50-50. Well, that younger audience, they are gamers. They're used to earning digital money. They're easier for them to adopt to Bitcoin and to that whole ecosystem than my vintage, my age at 68. You know, it's like so foreign. They're still into gold, but that younger audience. So we're going to see a massive transfer of wealth from my age to kids' age, and that's going to have a big investment opportunity. So one has to take a look at where are those new opportunities. And along comes AI, and that's now a new game changer in the development. So I think I remain so bullish that there's just so many unique opportunities. You have to look at supply demand of a commodity, just like I said, Bitcoin. You have to take a look at the new technology, how it's going to be disruptive. And you got to look to bet who are going to be the new superstars.
And speaking of all the babies young, you touched up on it, where I was going. The reason why I'm looking, because I'm going to your Frank blog right now because you wrote about this. And you wrote about 5 keys Bitcoin digital asset trends to watch. So one of those things is you see Bitcoin going a lot higher. And I guess even before we get to that part, when I look at the younger generation and Bitcoin, for me, I see that anyone that is under 40, I feel like Bitcoin is gold to them. Except, like you said, you have this capped amount, and every 4 years halved, which automatically is going to. It's the reason why Bitcoin goes up a year into the halvings every 4 years and a year after. Because you're reducing supply growth. But for me, I've always saw the demand after 2 years, the demand kind of tails off, and then it's created this cyclical industry, kind of cyclical with Bitcoin. Now that all these ETFs are coming to market, explain what that means, because I think as well, people know that listening to me of how big of a deal it is, and it's a game changer. I believe it's turning this into a secular market now, where you're going to see demand like you've never seen before, and people having access to Bitcoin. They've always had access, but this is going to be much easier access for the first time without wallets and things like that. How important is that to the price of Bitcoin, and where do you see it going?
Well, it's a great question. So I have to go with my gold world hat. And if you look at the date that the GLD came out, it was a significant sort of revolution for institutionalization of gold. That were never players before, and
it was 2004, right? 2004,
right?
Okay, good.
And it's outperformed. I said the S&P earlier, 2-1. It also gave more comfort, because when I first bought U.S. Global, the regulatory world were always anti-gold and gold stocks, and it was always bad characters, etc. And I think in 2015. There was a bunch of policies that came out of the White House to go after anyone who was in the coin dealer business. So there's still that sort of anti-gold. And so what I did see was the adoption of GLD took gold up about fivefold, roughly speaking, fourfold increase as more and more people use that as a proxy. It hurt the gold stocks. And why did it hurt the gold stocks? Is because the gold stocks at that time were all trading at very lofty valuations. They were buying each other. There was no respect for cash flow return on invested capital. It was just it was a run just to get size. And along comes investors buying bullion. And those gold stocks that did a poor job of protecting reserves per share, cash flow per share, revenue per share, they got clobbered, and gold stocks started to bifurcate. And you could see that 50% of the gold stocks were just getting knocked down, and they were pulling down the GDX and the GDXJ. And you can see massive dilution on the shares of all these acquisitions. And only the royalty companies and some of the other ones were very cognizant of good corporate governance for cash flow return on invested capital. I think that's what's going to happen with Bitcoin. The Bitcoin ETF is going to create this right now as a big sort of rat race just to sell shares and buy ASIC machines and get as much Bitcoin on the balance sheet production you can. And it doesn't matter how many shares you issue. There's many of Hive's competitors that issued 200, 300% of their float in a year. And at this stage, Mr. Market seems to be using them as that proxy. Hive has been much more disciplined at the least amount of share dilution with the steadiest cash flow. Because as executive chair, I run it like as an ETF, or like as very, very frugal in how we make decisions and look for high margin business. So I think that you'll see that ETF comes out, it will separate the miners like the GLD did with the gold stocks, and only the best leaders, the best executives will outperform. What I also think is that you have to recognize is that gold and Bitcoin are decentralized assets. So that's very, very significant. They're not controlled by any one central bank. Two is they fall in the category as alternative asset class. And some money managers, many wealth managers have 3% up to 15%, 20%, depending on your age, in alternative asset classes. So I think that the idea of having 1% going to 3% as alternative asset class will be bullish for Bitcoin because it is capped at 21 million coins. And I think that will be a factor that will drive the prices higher. But between now and when that happens, there are still tremendous headwinds, and it's very political. And we saw the presentation by Elizabeth Warren with Jimmy Dimon, and she doesn't like the banks, but Jimmy Dimon and her both are anti-Bitcoin. And all of a sudden, 2 days later, she comes up with 300 regulations and rules. And it's not really just to shut down Bitcoin, it's to shut down Web3, it's shut down blockchain. So then it comes up with another politician says that it was the bank lobbyists that pushed this agenda, and they're the ones that wrote all those regs and rules. There's no way you can go through a question and answer period and 2 days later come out with a draft of 300 regulations and rules. So it's a very much a political debate and discussion. I've tried to understand it more. I believe that there is some factor from the Bank of International Settlements. They don't care as long as that central bank, even if it's a rogue nation like Venezuela, as long as they do their trades for them, they don't care. It's recognizing that they have been on a regular basis speaking anti all over the world about Bitcoin and because it's decentralized. And for your listeners, what's interesting is that there's a little over 200 countries, and there's really maybe 100 functioning central banks around the world. I call it really functioning. And out of those that are sophisticated and functioning, you got to compare that to how many nodes are decentralized, validating the Bitcoin ecosystem. Wow, there's over 10,000. So it's very decentralized, and it makes it very hard for any one government or any one banking organization to come in to take it over. And so it becomes very much a political debate between centralized, decentralized, private property rights, government property rights. And so within that, you come with the advocates of climate change. Greenpeace has been funded to do a big knock on Bitcoin mining and why it's bad. So it's become very much NGO, politically motivated. But what I really think is fascinating to me as I sit back and observe these developments is that it's very decentralized, and it's big. It's bigger than anyone ever thought, bigger than I ever conceived of in 2017. And I go to these conferences, and I've mentioned this before in your program, that you and I have spoken at conferences in San Francisco and in Vancouver, and it's a free ticket, and they get 2,000 people out. Well, You had 30,000 people and $1,000 a ticket coming out. And they're not institutions.
Yeah.
Like there's institutions are spending 10,000 to have their own special seating, to be not with the riffraff as they call it. So in Amsterdam sold out, Prague, there was 100,000 people in Lisbon in November. 100,000. They put it into a football stadium, and they spent like 300 euros each. Like, so there is something happening outside of our normal capital markets, and those people, as you mentioned earlier, they are all gamers. They're all used to digital money, not monopoly money. They have a different view of the world, and they're going to inherit, baby boomers like me, our wealth. And trillions of dollars are going to be turned over. And so I think that the smarter politicians are recognizing that, and they have to turn around to make sure they embrace the technology. They're going to, and I think that we're just going to have this volatility. So sentiment drives it. Oh, the ETF's coming out next week. Bitcoin's up $10,000. Oh, no, it's been delayed. It's down $7,000. It's very sentiment driven. And some smart people believe that the Gensler is not going to push it through. He's going to find ways to delay and disappoint the market because it's a big political agenda, and it's coming from the banking lobbying. And so the bank lobbying group are very powerful, and we can see that. So when it happens, I don't know, Frank, but I think it will happen because young people embrace the digital world different than the baby boomers that dominate Congress and the Senate.
Now, you talked about the miners, the Bitcoin miners, right? So, which not the gold miners, Bitcoin miners, and you're the executive chairman of Hive Technologies, a company, like you said, in 2017.
To change my hat.
There you go. You're very familiar with this industry. Talk a little bit about this industry where, and just what the Bitcoin halving means. So, because you just reported actually positive news for the year, you could talk about that as well and start there. But just for people who aren't familiar with the miners and the industry of the miners, go into that a little bit, and what have you seen over the past, since 2017 with miners? Because this has been an industry that, I mean, skyrockets, gets annihilated, skyrockets, and a lot is based on where Bitcoin, even used to be Ethereum's going. But talk a little about that industry, because you are really, I mean, you speak at conferences, you talk to everybody within this industry, which is great.
I'm a member of an organization which has been so helpful for me because it's peer-to-peer learning, and but Bitcoin is peer-to-peer transactions around the world. Like I said, more 10,000. Well, this is peer-to-peer learning from each other. Like you and I get together and we discuss family and business and all the complications in our journey. We learn from each other. And the peer-to-peer group is called YPO, Young Presidents Organization. To be a CEO of this it's really, I go every year for a week at Harvard. I do case studies. I have to put 60 hours of research reading into it. And then we spend 60 hours in class, and we learn from each other where the trends are going, etc. When I first went into in 2017, basically co-found a Hive, and it became because I recognized, and it still hasn't happened, an ETF. There was not, at that time, it was not going to happen to be an ETF in Canada, the U.S., and there still hasn't happened in the U.S. So Hive, because there's no KYC or AML problem, because we mine the coin, I said, okay, I'm going to seed this. I'll put up capital and put an institutional umbrella around it. And so that journey, what I've seen is that out of the 30,000 CEOs of this organization, there was only four that had embraced crypto. 4 out of 30,000.
Wow.
Today, it's 1,000. And the CEOs of most of the miners are YPOers. Now, isn't that incredible? The YPO, HUD 8, Jamie Leverton, YPO. Fred Thiel, Marathon, YPO. So it really shocked us earlier last year when we had a group meeting in Miami, and someone had tallied up that we're about 40% of crypto mining globally. So you are now seeing professional CEOs and chairmen coming into this organization. Riot was a scam. They just tried to follow Hive after Hive's success, and they all got thrown out. The SEC went after these bad characters. Now it's a very professional business. And Benny, who's the chairman, he was tutelage under Ned Goodman, who's a famous Canadian mining guy, one of the most famous Canadian mining entrepreneurs that who passed away recently. But you look at their lead directors, Hubert Marlowe, he learned under Ned Goodman. Ned Goodman was my mentor. It's really fascinating to me that the CEO of Bitfarms, he was also with him. So you're seeing that high professional capital markets expertise has come into this industry. There's governance in this in this industry, and I think that it lends itself as being very conscientious about when Fred took over Marathon, he immediately got rid of all the coal. I didn't care about coal before. There's no coal, and there's no coal energy coming from them. And so you can see how the business has become very professional.
So you talk about the miners, right? And I want to bring this up because this is your 5 predictions. Guys, you can go to U.S. Gold. It's called Frank Talk. He writes every week. He has great stories on here. Really, really cool. And you just came out with this one, December 18th, 5 key Bitcoin digital asset trends to watch in 2024. And again, you can go there. It'll be a pop-up. You could sign up and get this in your mailbox. The second one interests me because you know, Hive is, a little bit smaller than some of the major players here. But you're saying how they're going to struggle to survive after the halving, where, that's coming in April. And that means where, I don't want to get too technical. People are not familiar with the industry in terms of hash rate and the difficulty of mining, but it makes it more difficult. And now you're seeing you need powerful computing systems. We know that a lot of them use NVIDIA chips, ant miners, and things like that. And those chips are super, super expensive. So, there's this whole competitive thing, but it also gets a lot harder after every halving, and this halving is coming up, and you're saying smaller miners are going to struggle to survive after the halving. What do you mean specifically by that, and how's that relationship to Hive? Do you think you're going to be one of those that are sitting there and one of the biggest beneficiaries, or?
Well, first of all, we've lived through a halving, and we prospered going through the halving. We have lived through where Ethereum went from proof of work to proof of stake, and it was a very high margin business vaporized. And so we understand, I think, these difficulties, and we're a little more, I think, resilient. What we found in the first halving is that were mining Ethereum at the time, and Ethereum was always a much higher margin business than Bitcoin mining. And so we were able to be profitable going through that transition. But what we did see is that a lot of the junior miners at that time, both private and public, did not upgrade their equipment. And what that halving does is basically saying, for listeners, right now, today, there are about 900 new Bitcoins being created a day. That is, and Hive is about 1% of the global network, like nine Bitcoin. And so when we look at that halving says you're going to go from 900 to 450 coins, well, your revenue is going to go by half. It's going to drop by 50%. The only way to survive that is for Bitcoin to double in price, or you to have more efficient machines. And a lot of people mine and sell all their coins and live off of that lifestyle, and they don't reinvest fast enough in the new, more efficient machines. And so you're seeing that a lot of the bigger miners are talking about all the spend they're doing, and same with Hive, of upgrading less efficient machines. At the last halving, we increased our foot size. We went from basically very little, 250 petahash of Bitcoin mining to 4 exahash. That's like 16 times increase in a number of from what we originally were, because we were able to acquire facilities that other people basically had to shut down their business. They couldn't do it. And we bought, I remember, 9,000 S19s for nothing. Just take over the facility and start bringing in new Bitcoin, new Bitmain machines that are more energy efficient. We were able to do all of that. And then we bought GPU1 and we've expanded their footprint, and we own the data centers in New Brunswick on our balance sheet. So they create opportunities, and there's lots of private miners that have sold all their coins. They don't hodl. They don't run big cash management. For us, we always make sure we have cash in the balance sheet. We always have Bitcoin on the balance sheet, and we're very conscientious of how we run. For our key factor is cash flow return on invested capital, how we deploy the capital. And I just see that you're going to see a lot of these miners don't have access to the capital. If you want to borrow, the cost of borrowing is like 18%. And a lot of people got into problems last year and the year before because they borrowed from these predator lenders in San Francisco and New York City. I mean, the two big epicenters of predator lending, and they pulled the plug and created the biggest bankruptcies, in that industry. So Hive does not do this lending. We do not borrow. We never pledged our Bitcoin. We never got pulled into FTX or Celsius, and they kept knocking Celsius, lend us your coins and we can make a lot of money on it. We didn't go down that path. And so I think that the successful miners are going to do much better. Marathon has gone abroad. They've gone to the Middle East and the Dubai region to expand their footprint and diversify the geopolitical risk of anti-Bitcoin mining in America. Hive is in Sweden, Iceland, and Canada. We've explored several facilities in America, but we're really conscientious about having green. We think there'll be opportunities, and those start to unfold it really starts to happen next month, February. The panic buttons will start happening with those miners that do not have the capital.
So you guys have, I believe I read, is it 1,700 Bitcoin that you have on the balance sheet? Is that correct?
Yeah, and we're now hodling. We raised money going into the year end to buy more machines to fast track some of the older machines we have, the Cannons, which are very profitable. We've got our money back a couple times over, but they're not energy efficient when the halving takes place. So that's what we have to be sort of focused on. And then our HPC is so exciting. It's really exciting because if you look at valuations, it's very hard to go buy a pure AI data center. And it's very hard to buy something if you want to go buy Microsoft, the data center business, or you want to go buy Amazon, it gets lost in a huge conglomerate. And when you buy Hive, you're getting this ramp up. And when we did our beta testing, we said last year, we did $250,000 the first quarter, and now we hit $250,000 a month. When all of our machines, NVIDIA machines we bought, which we got basically our money back, now are moving over, and you have to buy new racks. You have the special racks, or super micro racks. So a rack costs you like $15,000.
I've seen, and you can one put of the facilities, NVIDIA
chips into it. But then there's the magic. It's building a corpus callosum, the fiber optics between your left and right hemisphere of your brain. You have to build that, and people rent you. They'll pay you more per hour. So right now, for simplicity, making 15 cents an hour mining Bitcoin, and it's $1.50 doing HPC. So it's much more like what Ethereum was. And so it's this transition we're going through, that what we suggested our beta test would do is working, and come by our year end is March 31st, that we should have hit that milestone. And so we feel that going into the halving, we're going to have another very profitable part of our business. We've noticed that several other mining companies have announced buying NVIDIA 100s. But first of all, they're not preferred. Two is they have no idea. Frank, it's so complex. I had no idea. This time last year, I had no idea how challenging it would be to buy these racks, put the machines in. It's like the pages to hook up your computer may be 20 pages with all the cables and wires for your stereo system, your computer, and you think of that. It's 1,000 pages. So you have it's you're basically building a brain to do this AI work. And it's fascinating, but we've come through that. And we have seen our revenue, we've been public about it, of growing from $1,000 a day to $5,000 a day to $10,000 a day. So it's continuously growing as we do this transition of NVIDIA machines mining altcoins, converting to Bitcoin. We make much more money putting them on our HPC model.
Makes sense. Makes sense. So final question here, and I love that you explained that, because just the whole mining industry is fascinating to me. And you've been in it for a very, very long time. So where do you see Bitcoin going? And you know, what these ETFs are likely going to get approval. When I see Fidelity coming out and saying the fees are going to charge, BlackRock telling you how they're going to seed their capital, and you have Goldman and JP Morgan saying, hey, you know, we're going to basically managing these things in terms of making sure the trading and efficiency and stuff like that. Like you don't see those steps taken unless, you know, they're pretty sure it's going to happen. So say it does happen in the next few months in the Bitcoin halving and everything. You know, where do you see, not maybe this year, but over the next couple of years, where do you see Bitcoin going? Because I would think that's going to be great for the entire industry, for miners, obviously, and also a lot of altcoins who, you know, they call them shit coins, and it was so many more before FTX. But right now, the technologies that I'm seeing within 10% of this industry, it just fascinates me. With like blockchains being able to talk to each other without bridges now. It's you know, there's just so many companies. It's GameFi, it's DAO, it's Deepin, it's so many different things that I know you're familiar with. But where do you see Bitcoin going? I guess in the next couple of years.
Well, I think it trades substantially higher because the ecosystem is so much bigger. It's outside of the normal buy stocks and sell stocks capital markets. And I think that fusion will be of epic proportions, that when people say $250,000, it's very feasible. When I first started looking at being green coins, I said Bitcoin that's green is going to have more value. It's going to become like Andy Warhol art, or like a print I have of a Picasso back here. You know, that came out probably at $100 and goes to 10,000. It just give you an idea that more people adopt it, that they want to own one of the original prints of Picasso, and it goes up exponentially. And that's all based on Metcalfe's law. If there's a bad economy, these are deemed alternative asset classes behind me. They'll go down with the economy go up, but they have a uniqueness to them. And I think that for the listeners is to recognize that. And when I mentioned about the green, we've been offered more for our Bitcoin from green energy. Two, one Bitcoin gives you 100 million Satoshis. So that's like 0.04 cents. Mm-hmm. Now, what's happening with this time last year was a brilliant person that was able to figure out how to take this Satoshi and attach your picture of you holding your the hand of your daughter. So you can go back and you can find the Satoshi that day that your daughter was born. And maybe you can even find that Satoshi of that hour. Mm-hmm. All of a sudden, what is worth 0.004 cents is worth $10. Mm-hmm. I mean, think of buying a penny stock, 0.004 cents. And next trade is $10. Yeah, like that's massive.
And you've seen that within crypto often. It's not you wouldn't like you could cherry pick it.
They're called
often.
They're called ordinals.
Ordinals.
And so we've seen the revenue we make from our infrastructure and the Bitcoin network. Mm-hmm. We have it really is, and you can attach a peg file to it. And so the big adoption is going to be that, so not only having a picture digitized of you and your daughter or your wife at this special precious moment that you're celebrating your 20th wedding anniversary, and you want this special picture gold plated. Well, how are you going to gold plate it in the modern world is going to be attached to a special Satoshi. So all of a sudden these Satoshis, we get offered for, I think it was $250,000 for 100 of our Satoshis. Like unbelievable. So if that is happening, then that would say as Bitcoin adoption takes place, it trades much higher. And the generations X, Y, and Z and millennials are much more accepting of the digital world. But then we have, Netflix. I watched last night, Bitcoin, about the
Yep.
scammers that were. It should not be called Bitcoin because it has nothing with Bitcoin, and it's the ICOs, and I think it's branding rather than trying to tarnish the industry, and it's really how many bad characters. The biggest thing I could share with you that I've seen from a regulatory is that anyone in this industry has to get an audit. And you can see that it's been very difficult to get a big audit firm. And the accounting board has made it very difficult going after anyone that wants to, even for clean Bitcoin mining companies. And some people that have hedge funds that are in that space are finding it so difficult. So these characters, you need an infrastructure that if they're going to go into this industry, there has to be some type of an audit process, and that chases away really quickly a lot of these bad characters that had nothing to do with Bitcoin, nothing to do with, but the crypto ecosystem is growing. And I think that the former head of the SEC, Clayton, did a phenomenal job chasing down these ICOs. I mean, he cleaned out Dodge, and there were so many bad characters, because I remember when launching Hive in 2017, that you would go to some of the conferences and you see IBM people, you'd see really professional people and coders and engineers. And then over here, you'd have the riffraff promoters that wanted to have their Lamborghini, and it was all hype. I think a lot of that is gone. I think that's all been cleaned out. And I think I really clap for the regulatory world of going after those characters. But the ecosystem is real. The fact that it works 24/7, banks are on holiday. If there's an earthquake, you can still send the money to someone in Latin America or Japan. It still functions, but not any other methodology is next to impossible. I think that banks want to control everything. The charge everyone exorbitant fees. You can really see that debate now after it comes out that the two big bank lobbying wrote all those regulations for a senator. And so that means that they're very fearful of blockchain. But then on the other hand, you have Fidelity. Fidelity wants all settlements on the blockchain, want the whole back office on the blockchain. It stops illegal shorting. It stops failed delivery. So we see that sort of that debate. It's a punch-out match right now. And I don't want to get pulled into who's right or wrong. I want to just get into how do we run a good business? How do we make sure we have good governance? How do we have the most efficient machines? And then how is Hive innovating? We have so many. We're the first to do so many things. A classic would be the ATM world, which is called for at the market transactions to raise capital. We're the first to bring in 2 brokers on a cross border. All of a sudden, Riot comes in with 5 brokers on theirs. It's half the cost of doing a normal financing. It's a much better mechanism for overall deployment of capital. And we innovated that. We're the first to go.
Which is why, and sorry to interrupt you, is you're hearing so much out of the banks, because this is an industry where, they try to hold it down and you can't hold it down anymore, but just it disrupts the foundation for so many of these companies and banking companies and the fees they charge, because things are so much easier now. So, like you said, the Bitcoin and Jimmy,
You know what happened in Canada? This is interesting to me, experience in the summer in Canada. We meet with 2 big banks. So 5 banks control 80% of all wealth management in Canada. 5. So they control the regulatory regime. They control so much with lobbying, that mechanism. America, there's 4,000 banks. So you have a little more diversification, but you do have some massive money center banks. So with that, these 2 banks approach us and say, we want to work with Hive, but we love your HPC business. But we can't do anything with a crypto mining company because the banks won't allow it. And I said, really? Okay, all right. But we want to sort of carve out your HPC. And I said, really? I said, so who has that expertise? Oh, we don't have it here. You have to go to New York because those 5 big banks have shut down fintech in Canada. There's no real fintech. If a guy's a real smart fintech person, he goes to the U.S. Or he goes to England. There's no, they won't allow a fintech bank in Canada, but they have in England. So it's interesting to see what happens if you get a concentration of a big banks controlling the financial sector, that you get this moat that really harms technology and the evolution of technology. Just like the cab industry used to have two families owning all the licenses in a city, and they paid for their politicians, they kept it all, and it was all disrupted with Uber.
Mm-hmm.
So I think what happens is that the blockchain Bitcoin ecosystem is a threat, and that it would disrupt. It's not going to totally disrupt, and I think it's faster that they embrace it, because it's just part of a new way of being able to do transactions. And actually, they always say that bad characters use Bitcoin. You can track Bitcoin wherever it's been in the world. You just don't know if it's between you and I, but you know everywhere it's been. You don't know that with a $100 bill.
No.
You don't know if it was with a narco in selling drugs in Miami, and then all of a sudden it's showing up in LA, and then it's the same $100 bills then in Spokane. You don't know. But Bitcoin, you can track where it's going. So there's much more ability, but the fact that it functions with a flow, a heartbeat of every 10 minutes around the world, 24/7, doesn't matter what religious holiday, it doesn't matter banking holiday, it functions. And I think that that's where the global economy is going to go.
Well, that's great stuff. So if anyone wants to find out more information on you, Frank, how could they do that?
usfunds.com. I write at US Funds, US Global Investors. There's Frank Talk, and there's the Investor Alert. So if you just sign up for Frank Talk, you'll get some interesting topics and discussions that are not every day that you're going to read. One of them I just saw is the immigration. You see the whole immigration issue of illegals coming across the border, and the political attack and the conspiracy theories. All, it's Biden, but it's really being funded by Russia and China. You have all these Africans. They didn't swim across the Atlantic Ocean. They were flown. Who's flying them? What NGO? Who's funding the NGOs? All of a sudden, Italy stops. The new president of Italy says no longer they're going to do the China trade, Silk Road trade, and they're anti-Putin invading Ukraine. And immediately, all these speedboats with people with life jackets on are coming across of 100,000 people landing on islands off of Sicily. Like, who paid for that? And it's to disrupt. So I write about those things, and then I say, what investments? What do you look at to protect your investment portfolio? Where are the opportunities to capture? And that's what I try to look at, these global factors, because I say that government policies are a precursor to change. There will always be imbalances between monetary and fiscal policies, and that arbitrage is where smart investors come in. That arbitrage is when there's big long-term lags and gold shines, or all of a sudden gold is going to be a negative. But what is really important for Bitcoin and gold is that the modern monetary theory, MMT, and our good friend Marin Katusa has written about this, and I think you've written about it too, that really took traction out of the UN and World Economic Forum in 2001. And you can see that from that period on, gold has outperformed the S&P 500. The idea of universal checks for everybody, all these sort of socialistic models of thinking, and that just use monetary model to do it, creates big lags and distortions between monetary and fiscal policy. And that's where these alternative asset classes are important. But you got to remember, don't put all your money in. I would never say that, because you'll get jalapenos. You need to have some food. Jalapenos spice up the meal, but don't eat a plate of jalapenos, because you'll be sick.
Good advice, Frank. Love having you on. I mean, we went talk about global markets, the regular markets, elections, Bitcoin, miners. Yeah, fantastic stuff. So thank you so much for coming on. Everybody always learns so much when you're on, and just we love your energy too. So keep up the good work, and hopefully we'll see each other in person pretty soon.
And who's your favorite basketball team this year? Who do you think's gonna?
This year, well, I'm a Kansas Jayhawk fan for college, but this year, I mean, I've always been I can't even say this, a Detroit Piston fan since Isaiah Thomas days. So I'm just hoping that, they don't. They're probably gonna have the worst losing streak ever. But yeah, hopefully they could pick it up a little bit because that's pretty sad what they've been doing. So not like your Spurs.
I was talking to
I love your future of your Spurs though.
But one of the big parts we were talking about it was some real basketball professionals, and they were saying that when Tim Duncan came into the league and we had the Twin Towers, that David Robinson was there. And David Robinson was a Navy. He was a military type mindset of discipline, organized, and family, and all those values. He was a great mentor to these other stars that the Spurs brought in, like the Tony Parkers and the Ginobilis.
Yeah.
And so we have this new young kid that's a superstar, but there's no one that's like a David Robinson. So I think it's going to take a little longer to gel. Yes, you need a great coach, but you need to have that seasoned person that is so great family values and discipline like a David Robinson.
Yeah, but I think he'll come along. He's just an incredible talent. So, and he's humble too. So it's a good quality. But
most important,
Pops will bring him along fine, hopefully. So, but I hear you.
Have a great year.
All right, you too, Frank. Thanks so much for joining us. I'll talk to you soon. Take care.
Take care.
Okay, guys, great stuff from Frank. Love having him on the program. Just the energy that guy has, man, is just incredible, man. He's just he's an inspiration. At least for me, I love it. He's just like a research junkie, loves what he does. You could tell. But get back to Consumer Electronics Show again, guys. I'm there right now, so as you listen to this, it's cool. You have any questions, comments, follow me on Twitter. I'm going to be having lots of videos, lots of ideas. I'm going to share the best ideas with you, obviously. Especially lots of really, really good ideas in our Wall Street Unplugged premium podcast with Daniel. So be sure to listen to tomorrow. Again, if you want to subscribe to that, it's very easy. Just go to our website. You can subscribe. WSUpremium.com. It's pretty easy. It's very, very cheap. But lots of stuff to go over. I love going to this event, and the AI tour is going to be amazing. But that's just Wednesday, all day Wednesday. Thursday and Friday, I'm going to probably meet with another 100 companies, being broadcasting everything and testing out all the new technologies and services, and have lots of meetings set up. If you're going to be there as well, feel free to drop me a line. I try to meet subscribers. Sometimes I get a lot, like 20 or 30, and it's really like business. It's fun, but it's business. It's like every second's accounted for, learning so much new stuff. My mind's like all over the place, but I try to meet my subscribers whenever I can. So if you're going to be at the Consumer Electronics Show, drop me a line, frankcurzioresearch.com. I look forward to seeing you tomorrow on Thursday. And again, I'm going to try to do everything I can to call in live to Daniel Creech on Thursday's podcast. And if not, I'm definitely going to send him a lot of information, a lot of notes of what I'm seeing, some ideas. So that's it for me. Questions, comments, I'm always here for you, frankcurzioresearch.com. And see you guys tomorrow. Take care.
Wall Street Unplugged is produced by Curzio Research, one of the most respected financial media companies in the industry. The information presented on Wall Street Unplugged is the opinion of its host and guests. You should not base your investment decisions solely on this broadcast. Remember, it's your money and your responsibility.